Good afternoon, ladies and gentlemen. Hello. My name is David Kopecký. I'm from the ACCA office based in Prague, and I would like to welcome you to our today's event, our conference, Accounting for a Better World. Now, we have nice participation here in Bratislava. We have a great participation also online, so welcome all. Accounting for a Better World. First of all, I would like to say something. ACCA, we have many ACCA members here, some ACCA students and ACCA partners. Most of you know ACCA for its qualification and quite difficult exams, actually. Most of you are ACCA members or students. Now, ACCA is really not only the exams, not only the qualification. We have in our logo, think ahead. The motto, think ahead. This is definitely an encouragement for the students who study ACCA to really look ahead to their future career in finance and accounting, but it also refers to ACCA as organization. ACCA really is very much an organization which very much looks ahead and tries to keep up, stay on top of the latest trends of the profession of finance and accounting. We really try to open the discussion of these important topics for the profession today. And today, our conference is actually one of the events, one of the discussions. Sustainability, sustainable economy, and sustainable finance is definitely one of the important topics for the profession of today. Now, I must say, we are very proud to have a fantastic lineup for the conference today. We really have the speakers who are leaders of their professional leaders in their own field. And I would like to thank them first, thank for their active participation and for their involvement, so thank you very much. I would also like to thank our partners, who are in this case CFO Club, Slovakia, and American Chamber of Commerce, without whom this conference wouldn't take place. So again, many thanks for your contribution. Now, to our today's agenda. Today's conference is actually divided in two blocks. In the first block, there will be this will be the block of presentations. We will open up with a presentation by my colleague Jamie Lyon. Actually, this will be the introduction of the ACCA report, Accounting for a Better World. This whole event is actually designed based on this ACCA study. So our colleague Jamie will introduce to you this ACCA report. After this, we'll have probably a more macroeconomic view on the problematic. We'll have Ms. Korčeková speaking about Slovakia's recovery and resilience plan. And finally, we will have Katharina Kazashova, Managing Director of the Auditing Supervisory Body, Oversight Body, and we will cover the topic of advancing standards and regulation. Now, this will be, after this first part, we will have a very short break, and we'll start after this with a discussion, panel of discussion, and the topic will be sustainability in finance and its impact on various economic sectors. The discussion will be led by our moderator, Sonia Muzikárova. And in this discussion, we really try to touch the topic from different points of view. So we have really representatives, leaders from different fields, different sectors of economy. So this will be the discussion, which then will be followed by route and networking. So please make sure you stay even after the discussion. Now, we will have a space for questions after actually each presentation. Yeah? We will take questions from the audience here, and we will take questions also from the online audience. So for the online audience, I encourage you to type your questions. You have the option actually to ask your questions in your chat window. I'm sure you can see it in the, believe, right bottom corner. Yeah. Okay, thank you very much. So with this, I would like to hand this over to Jamie Lyon. I hope we can hear Jamie. And just as a short introduction, so Jamie is a colleague of ours based in the UK. Jamie is a member of the ACCA Professional Insights team, and he's actually head of business. How is it exactly, Jamie?
I think it's changed recently, David, if you can hear me, but business management is fine.
Yeah, that's it. Yeah, and actually, Jamie is the author of the report Accounting for a Better World. So Jamie will introduce this report as a framework for our conference. So thank you, Jamie, and I hand this over to you. Thank you.
Super. Thanks so much. Thanks so much, David. And it's a real pleasure to be with all of you today, virtually, if not in person. I'm going to start with a thank you, really. Thank you to you, David, to the ACCA team, as well as our external guests in supporting this event today. So, as David says, my name is Jamie Lyon. Globally, I lead ACCA's research and thinking around different issues impacting the future of the accountancy profession. I was going to introduce this conference by saying a few words about a global campaign that David alludes to, that we've called Accounting for a Better World. And what I wanted to do in the 15 minutes that I have with you is tell you a little bit about the priorities that we see ahead for the global accountancy profession in essentially helping create and develop a better world for the future. Now, this sounds very aspirational, but actually we do feel that accountancy, the profession, accountants do have a role to play in helping create that better world for tomorrow. I've been in the profession for about 27 years. I qualified as an ACCA member in the late 1990s in London. I was in industry working for a number of FTSE 100 businesses, and I would say, given all of those years, the amount of change that I've seen in the last probably 5 years and the speed of that change that's accelerated over the last 5 years has been really significant. It's definitely the biggest amount of change that I've seen for all of that period, really. And I guess we have 4 major impacts taking place at the moment. Clearly, obviously, we're all aware of the pandemic that's happened. I would say, secondly, the longer term shifts that we're seeing in terms of the future of work and how that's playing out is going to have a big impact on our future as a profession. I'd say, thirdly, the escalation, the immediacy of the climate crisis. I know we're going to talk about sustainability a lot today, the conference. And fourthly, of course, the trajectory right now of the global economy. I mean, if we look at what's coming out of the IMF at the moment, clearly we are in an inflationary period. We have the spectre of a global recession around the corner as well. So there's a lot of very interesting things that have come together or are coming together over the last few years that really promotes and highlights why we need to think about, well, how do we create that better future for all of us? And also, what is the role of the accountancy and the profession in all of that? And that's why we launched this campaign. It really is about how do we as a profession help create that better world for the future, because we genuinely believe at ACCA that accountancy and all the jobs and the roles that you do is a real vital cornerstone of the global economy. It's essential for economies to grow, to prosper, and we want to see a better, fairer world that works for everyone. And actually, we think that we do need to see a reset in the relationships between business, policymakers, the public sector, and wider society. Now, I'm not going to suggest for 1 minute that accountants can solve all of the problems that we face in the world, but actually, we do believe the profession has a role to play. But what does all of that look like in practice? So certainly through all of the work that I do and my team do, when we look at different issues impacting the future, broadly we think there are 7 priorities for us as a global accountancy profession ahead. And these are the things that we think as ACCA, as a global professional body, we need to focus on and continue to promote the role of accountancy, the role of accountants, and ensure that we do actually contribute to that better world. And you can see those 7 priorities on this slide here. So what I wanted to do was start by talking through each of those, and I'll start by talking about the role of the profession in fundamentally building the global economy of tomorrow and building resilient economies for the future. And again, I sort of suspect that many of you will naturally associate ACCA or the global profession in this role, but actually, particularly with what's happening in developing markets around the world at the moment and some of the challenges that we're seeing, we actually spend a huge amount of time working with governments, with policymakers, with regulators around the world to really help develop policy, develop regulation that helps economies to grow. And part of that story is also about how we try and work with different parties to advocate for free and open international trade, collaboration across economies, and so on. And linked into that, we do other things as well. So things like financial literacy in emerging markets and trying to encourage that is really important. We get involved in things like school ambassadorial programs. We do a lot of work in the wider community around improving financial skills, training opportunities, and so on. So that's a real part of the fabric of the global economy, particularly now where we've seen a divergence between probably some of the mature economies and some of the emerging economies post-COVID. There are obviously big challenges for many markets, and this is a really important responsibility that we have for the future. It won't come as a surprise to any of you, I don't think, that ACCA and the profession clearly has a vested interest in developing the talent of tomorrow and developing that financially skilled workforce. As many of you know, we have a new generation, Gen Z, coming into work. I personally think they're very smart, tech savvy, environmentally, socially conscious, ambitious. I think they will change work for the better, actually. But attracting them into the profession for us, for ACCA, is really important. And it's important that, from our point of view, that we continue to promote accountancy as a career choice that is going to retain its currency in the future. But it's not only about just attracting a younger generation in and making sure that they hopefully choose to become accountants, but actually we do a lot of work really helping play our part in that broader role in shaping the future of work too. So when we think about things like reskilling for the digital economy, we are doing a lot of work in terms of expanding our lifelong learning offering at the moment as our members particularly navigate those sort of changing career pathways. So we're doing a lot of work around that space, and it's also about equity, and it's about fairness, and it's about making sure that our profession still attracts people right across the social scale. So I'd say social mobility, and making sure that we are a profession that is very inclusive and very equitable and open is really, really, really important. So attracting talent in is really, really big, and it's a big part of this campaign around accounting for a better world. Sustainability, I know you're going to talk a lot about this in the sessions today, and I think the profession is all about sustainability. We all know that there are growing demands for transparency, accountability from stakeholders. Some of you will be aware of the recent developments we've seen in the reporting space. We've seen the creation of the International Sustainability Standards Board, and that's really intended to create that global baseline of sustainability related disclosures. But actually, when we think about sustainability, and I'm sure we may get into these conversations today, the contribution of the accountancy profession goes way beyond that external reporting agenda. So we think about things like the role of accountants in performance management, in risk, the role of accountants in helping organizations meet their net zero goals. Lots of emerging opportunities in the future that we see around things like ESG, assurance, and so on. So sustainability in our role as a profession in promoting the role of accountants in this agenda is really, really front and center at the moment. It's probably one of our biggest priorities. Next up, I'm just going to touch on standards and regulation. I know we're going to have a presentation on that as well shortly. At the end of last year, we launched a new global white paper at ACCA called Principles for Connected Corporate Reporting, which was really a call to arms to policymakers, to regulators on the future principles of corporate reporting standards. And when we think about advancing standards, when we think about the future of regulation, again, this profession has a huge contribution to make. We think about particularly standards and regulation in the face of an entrepreneurial digital economy. That's a real challenge. We think about the role of standards and regulation and the role of the profession in advocating for and helping improve global tax systems. There are a huge amount of challenges for policymakers in tax reform at the moment, emerging forms of currency, shifting workforce practices, employment practices, role of tax in redressing climate change and so on. So tax policy is really, really, really important, and how we as a profession help shape that globally and at a local level in the future is going to be important. And then finally on this slide here, corruption, economic crime. Certainly the digital economy has opened up corruption risks, cybercrime, money laundering, fraud opportunities. So there's going to be a real need for the profession to continue to step into that space and develop regulation standards that really do uphold the rule of law, fight corruption in that digital economy. I've got three more priorities for us as an organisation and as a profession that I just wanted to cover off. The first of those is the public sector. I think we all know that when we look across different countries and jurisdictions across the world, the public sector, national governments, particularly in the wake of the COVID crisis, are facing huge challenges. Financial challenges, particularly the debt legacy that we've seen, and there are longer term issues as well when we think about how economies transition to low carbon, when we think about how populations are upskilled for digital, how we think about how countries and jurisdictions and governments can help deliver sustainable development goals. So repairing public finances is a huge, huge challenge. And how do we as a profession work with governments around the world to ensure that policy decisions are sustainable, that policy decisions help create better societies, greener futures? That's all a real a key imperative. And part of that is how do we think about transforming public sector financial management? How do we transform public sector risk management in the future? How do we drive more accountability and fundamentally support better decision making for the future? So again, the public sector is really important. Next priority, my penultimate priority for us, is really about the entrepreneurial economy, and this is a real opportunity. We know that small businesses are a huge part of the world economy. ACCA has gone on record many times to say that smaller accountancy firms are the natural trusted advisor to small business, and we know particularly smaller businesses are really important. Smaller accountancy firms are really important in helping support entrepreneurs and small businesses to grow in local economies. So advocating the role of small business in driving innovation in our economy is really important. And particularly when I think about smaller accountancy firms, and I'm sure it's the case in Slovakia, they're really important in local communities, in local economies. They provide employment training. They really help develop some of the skills that local economies need. So supporting entrepreneurs and supporting smaller businesses is really important for us. And just while I'm on this, just a very quick plug for the ACCA practice rooms, which you can find on our website. It's a really fantastic initiative that's been developed with the support of our members around the world, people who are running their own practices and accountancy firms, and really talking about how they're transforming their clients' businesses and their clients' lives, and all of the different interesting things that they're now advising their clients around, everything from technology transformation to sustainability and so on. So it's very innovative and an exciting space for us, and we really want to support our members around the world in continuing to offer those services as businesses and economies transform. And then I wanted to finish off on this final priority, which is around trust. In delivery. And whenever I talk about the profession, I always come back to this point around, well, at the heart of our profession is this piece around ethics. It's enshrined in what we do. It's enshrined in the code of ethics that we all subscribe to as professional accountants. So it's just a fundamental part of who we are. It's a fundamental part of the profession. And clearly what we need to continue to do is make sure that we are seen as a force for good around the world, and that accountants and all the organizations in which accountants work, accountants play a big role in really promoting good business, good ethics, good governance. That's really at the heart of everything that we do. So there are the 7 sort of things that we're thinking about at ACCA at the moment. I appreciate it's an incredibly broad narrative, but the reality is that we are operating in a world which is more complex, more diverse, more interconnected in some respects, and it's challenging. It's there are lots of challenges that we face now, but also opportunities for the future. So that's just some of our thinking. It's a real pleasure just to tee this one up for you all today. I wish you a very successful conference. Do accept my apologies for not being there in person. And David, I think I'm going to hand back to you, if I may. Thank you.
Thank you very much, Jamie. Thank you for your introduction of the ACCA report. And now we have a short space in case we have any questions from the audience here or even online on Jamie and the ACCA report. So do we have any questions at this point? Okay, in case not, I will give the floor to Ms. Kristina Korčeková. Ms. Korčeková, she's a project manager by the Slovak government office, and she will introduce to us the recovery and resilience plan of Slovakia. Yeah? So thank you.
Thank you. Thank you very much. Well, I was about to say my name and where I'm from, but Mr. Kopecký has done that, so I don't have to repeat myself. As was said, well, which wasn't said, is that it is an honor for me to be here, to talk in front of professionals of a profession that I usually don't come in contact with. And it's always very nice to have the public and private sectors interming, because we don't really have many occasions to meet. Usually there's a little bit of doubt and trust issues, like what are they doing, what are we doing? So it's always nice to be in one room and talk about a topic that is common to all of us, which is sustainability and resilience. Otherwise, we wouldn't be here. So I'm certain that my expose will be interesting. If it's not going to be, you can tell me afterwards. I have tried to pick the pieces that might be a little bit more interesting, that are more in tune with the private sector, that are relevant to the private sector, but I'll try to give you a whole understanding of what the Recovery and Resilience Plan is, what it isn't, what it could be, why it exists, and all of these things. Because my department and the Office of the Government, we are the ones coordinating the implementation. We are not the ones doing all the reforms and investments. We are an overseeing body that sets out rules, communicates with the European Commission, negotiates some additional rules, treaties, perhaps some leeway if we can, some exceptions, but that doesn't really work much. So we have an overview of everything, but we don't do anything, if I may say it so. But before we get to that part, I would like to make a little check of where we are right now in terms of sustainability and resilience, not necessarily when it comes to the public sector, not necessarily when it comes to the government, but to the fact that it's been 32 years, so as long as I have been alive, since the first IPCC assessment report. That was the report that put down a few very important facts, that there is a climate change, that it is caused by humans, that it is going to be a problem, and that we have to cooperate, internationally cooperate in order to solve it. Since then, however, especially in Slovakia, resilience and sustainability, it wasn't really a serious topic. It was headlines from European policies that we didn't really take seriously because we didn't have to. But that has changed. As of today, we have it confirmed that this summer was the hottest on record in Slovakia, but also in many other European countries. For the first time, we experienced a lack of water, something so basic. We always believed there's going to be water because we had underground resources, but this year there wasn't enough. The farmers, the forest rangers told us so, and we had our first forest fires, which again, we never believed we will have because that was the problem. The Spanish people, the Italians, the French, they had those. We didn't until this summer. This summer we got it all, and if we weren't part of the European Union, we would have a problem because we haven't been taking the problem seriously. But they have been. Well, if I say they, I mean us, because we are also European Union. So this is going to be quite a Europhilic expose. Again, if you don't like that, you can tell me that afterwards. So the EU has been making plans. In 2019, we had the European Green Deal that was revealed. We can understand it as a set of policies, of proclamations of where we stand that did some crucial things, such as recognizing that the climate change is a threat, and not only climate change, but also other environmental damages we have done to the biotopes, pollution, loss of biodiversity. It also acknowledged that the predicted 2 degrees Celsius increase in the global average temperature compared to the pre-industrial levels is a problem, bigger than we thought, and it's an unpredictable problem because all the feedback loops that come into play. So we cannot afford to have this kind of increase. But it also promised to reach no net emissions of greenhouse gases by 2050. That's a big commitment. To decouple economic growth from our use of resources, both energy and materials, and to include a social aspect. So no person and no place left behind. That's the cohesion policy of the European Union. And the Green Deal was also thinking and presenting of various funding tools, but it wasn't really making new ones because the European Union has a lot of funding tools. So we were thinking of just using Green Deal as a framing policy and putting it in everything that we fund, either structural funds, investment funds, innovation funds, research funds. We have plenty of them. And wait, there. No, and now we move to 2020. So just a few months after new European Green Deal was announced, came the pandemic. And so came also the common reaction that was very fast of all of the European countries to balance out and repair the damages the pandemic will cause. Because here we are at the beginning of 2020, we don't really know what's going to happen. We're in panic, but we're doing a lot of things. And also we're thinking, yes, we're going to have to recover, but we need to be more resilient because we cannot afford more crises like these. And there comes the RRF, Recovery and Resilience Facility. I will be talking about the Slovak perspective, which is a little bit special because we indeed are one of the front runners in the whole process. It's something new, something that had no rules at the beginning. The rules are being created now, which creates a whole set of problems. But it's coming up to us. We are the 5th member state to submit our plan. We were the 3rd to set up implementation rules. That is a law, and that is a whole manual of implementation. It's only 80 pages, which is a very low number compared to the structural funds. And we were the 7th country to apply to have the funds paid out after successfully fulfilling our obligations connected to the first request of payment. That was 14 milestones. And what made RRF also special, when I was talking about Green Deal, was that it was the first funding mechanism where we really thought about Green Deal. It was the opportunity to put the Green Deal into a whole new mechanism that we didn't really have to adapt anything existing. We could thought of Green Deal from the start. The timeline was very fast. For those who are familiar with public funds and with the structural and investment funds, we negotiate for years a document that is just a framework document that says we're going to spend this much money on these targets, and then we have 9 years to implement that. In this case, in the spring of 2020, we decided the facility will be created. That year, we have created it, I think, or maybe slightly after. It was 750 billion euros that are going to be paid out to the member state in grants and loans, and was to be funded by emission of green bonds by the European Union. So the regulation establishing the RRF came in February 2021, and already 2.5 months after that, we had the Slovak plan submitted to the European Commission. I'm sorry, I'm just like really hearing myself in my ears. But we have, oh, this is nice. Yes. Well, we have, oh, now that's too much. We have submitted the plan in April 2021, and by July 2021, we already could start implementing because it was approved by the European Council and by the ECOFIN. We have signed all the legal documents that we had to, and we are right in the middle of implementation. What is the RRP made of? So we had the Recovery and Resilience Facility, that is the mechanism, and then we have the RRPs, which are the plans made by each member state. At this point, each state has their own plans approved, except for Hungary and Poland, because of issues with governance and others. The difference from other European funds is that this is really comprehensive. You have reforms and you have connected investments. No other European funding facility asks for reforms to be made, but in this case we had to put in reforms. We had to put in investments. We have 66 reforms that are connected to qualitative milestones that we will reach, and we have 66 investments that are connected to targets that are quantitative. So you can very nicely check how are we going, how are we fulfilling our KPIs. It's very specific and everything is decided upfront. The demands for the RRP at the beginning weren't really big, they weren't really sizable. They had to be in line with the country-specific recommendations. That's a process that the European Commission does to every country every year. Basically makes an assessment of what you should do to make some areas of your governance, of your life better. So we had to take those into account. Then we had to take into account the Green Deal part of the RRF, which was a minimum threshold of allocation of the whole investment that we were supposed to be given, allocated to green transformation. So basically we had guidelines saying that this is green investment and this isn't a green investment, and altogether we had to reach at least 37% of the whole bulk of the money to be tagged as green, and a similar process for the digital transformation, because it was understood that for resilience to future crises we need to be transformed greenly and digitally. And we introduced a new principle called do no significant harm, which basically meant that we had to ex ante assess every measure as to whether it's going to create unintended harm to some area of our climate or adaptation or biodiversity attempts and policies. So everything had to be checked in advance. And if we found something that could represent a danger, we had to create a mitigation measure that would eliminate this danger. All in all, the Slovak plan is 6.5 billion euros in grants. So the Slovak Republic decided not to take any loans. It is in 5 areas: green economy, education, science, research, innovation, healthcare, and effective public sector, and digitization. The only sectors left out were defense, because that was not eligible, and agriculture, because we have the common European agricultural policy, so we didn't feel like we need to add more resources there. It is worth noting that this sum is not the final sum. Because when the facility was devising how are we going to divide all this bulk of money, some part was decided on the economic performance and the strength of the member states at that given time in 2021. But some part was left flexible, and depending on the results from 2021, economic results of each country, we could get more money or get less money. And thankfully and unfortunately, Slovakia was doing quite well. So this amount is actually going to be decreased somewhat. The implementation structure, it's not maybe the most interesting, but it is a little bit different. If you want to know more about the recovery plan, you can go to our website and you will find an 800 pages long document. That's too long. From that, we have a Council implementing decision, which is much more structured. It's basically a long Excel sheet that was negotiated and approved by the European Commission and by European Council, where we have listed all of the milestones and all of the targets that we are to fulfill. They are organized chronologically and then into 10 groups. Each group represents a payment that we can ask for and has a sum associated. So we had a set of milestones and target. That is a request for payment that we can put up, but we need to fulfill everything that is written there. For now, we have been successful because we had that first request of payment of 430 million euros. And we didn't have to spend a dime, basically, because all of those milestones were reforms. So you see there isn't really a connection of actual spent money and then reimbursement by the Commission. It's basically being paid or giving money for achieving things that you set out to do. So now I would like to tell you a little bit more about the green economy components. I will try to find the aspects that are more interesting to private companies, but I think it's all interesting, but that's just my professional, how to say, damage. So we would have the renewable energy sources and energy infrastructure. We have some reforms that are basically making the energy market more flexible and more adapted to the new concepts, such as energy communities. It is allowing us to connect new renewables. That is extremely important right now. And we also have investments earmarked for new infrastructure, that is new capacity for renewables, modernization of existing capacities, and also some storage facilities, because you need that if you're making the grid more flexible, you need to have more storage as well. Renovation of buildings, that is sort of my forte, if I may say so. It's my favorite part. It's very important, but it's also a flagship of the recovery plan. You might have heard about the 500 million euros that are earmarked for the renovation of single-family houses. We were able to launch the scheme and open it up this month. So 30,000 houses are going to be renovated to get energy more energy efficient. That is approximately 3% of all of the houses in Slovakia. We will also be renovating historical and listed public buildings. In the sustainable transport, we have cycling infrastructure, we have railways, but we also basically want to create a charging infrastructure for the whole country so that the e-mobility can happen. That is 3,000 charging spots publicly available, that both private and public bodies will be able to ask for the funding to set up a spot like that. Decarbonization of industry, now that might be really interesting, I hope. It is a scheme, a big scheme of 50 million euros for the ETS connected companies. That is the companies that are in the European trading system for carbon. So that's carbon trading, the really big emitters. And they will be funded partially to reduce their carbon emissions by at least 30% compared to the counterfactual scenarios, so that it's like if they were going in their business as usual, which will lead to more than 1 million tons of CO2 spared, which is 3% of the Slovak emissions. So that's a huge chunk. If this scheme will be successful, we are right now in the state aid notification process because it is a state aid. We need to obey by the rules. And then we have a smaller component on adaptation where we are really working with the nature and waterways and local communities in some of the areas. One of the last remarks will be a component 9 about innovation. Innovation thinks about digital technologies and about green technologies, and it is the component that is most open to private businesses, both to SMEs and corporates. It is supporting a lot of collaboration between research bodies, small companies and big companies, and it is organized in a lot of various calls, usually matching grants. For example, a research body can get a matching grant from the state if they secure funding from a private body. So we can support research and innovation this way, but there's also going to be a 80 million earmarked for private projects, private-public projects in green transition. So we want to support 30 projects that will decarbonize the economy. So we're talking anything up to TRL 9. So it's various stages of development. Well, and my final remarks will be somewhat I want to say, just calling upon to you that striving for resilience and sustainability is a common undertaking. It is our joint responsibility, especially with the energy crisis right now that will hit hard everybody, not only the public sector but also the private sector. Everybody will have to do their part. But what I wanted to finish up with is the Corporate Sustainability Reporting Directive. It is not my forte, it is not something that we do, but it is a European policy that hopefully will be a proper regulation, a proper directive, where you as accounting professionals will be asked upon to account and take into account all different kinds of KPIs and all different kinds of data, because we need to have the data to see how well we're doing, because the data we have right now, it's not the best. So you will be asked to provide this data to find ways how to account for emissions from various sectors of the activities of the big companies, but also from the SMEs. So at this point, I would like to thank you for your attention and give floor to the following speaker.
Thank you very much, Christina. Thank you for the great overview. Now, ladies and gentlemen, do we have any questions on, yes, please. Okay, we have one here.
I will go back there.
Thank you. In the presentation, a few times were mentioned the term green. For example, green transformation. Is it green based on EU taxonomy, or it's the different term of green?
At the point where the RRP was written, taxonomy wasn't really approved, but it was something that we had at hand to be used. So the green transformation, we had a list of intervention fields that were very specific and meant whether this is green or not. For example, if you were to spend money on renovating houses, but not reaching some minimal savings, you weren't counting all of the money you spent as the green transformation. You had to reach a certain percentage. So it was based on the taxonomy, but it wasn't 100% taxonomy.
Okay, thank you.
That you really jumped through the sustainable biodiversity investments, and I would like to see that.
Yeah, sure. I don't know if I can get back to the presentation, but I could tell you that we have basically 3 big parts there. There is a revitalization of watercourses. So, you know, a lot of times we have modernized the waterways to make them much more geometric, so not very close to nature, and now we need to put it back, basically. So that's one investment. The second investment is to buy, as the state, some land in the national parks and in the protected areas, so their management is going to be easier, and that is something that we cannot fund usually through other sources other than state budget. And the last one is smaller investment. Those are open calls for projects, development projects in the 2 areas that are national parks. So those were development of soft tourism or some sort of small changes and projects to attract people to the region and also support employment.
Thank you very much.
Thank you, Christina, for the great presentation. Just a quick question. What are some of the mechanisms embedded in the EU framework, but also this specific plan that ensure that the implementation and the delivery of this plan happens beyond the political cycle?
Well, the first one is that it goes beyond the political cycle, that it goes up to 2026, and that we don't really have the same luxuries that the European structural and investment funds have. There, if you don't spend the money, well, then the worst-case scenario is just left in the European budget, or you could switch the money for different places. But RRF is not about the money, it's about meeting the milestones and targets that you're supposed to do. So if there would come a political force that would decide not to do something, then the whole system falls apart. Because with the requests for payment, we have the 10 of them scheduled, that is signed, that is an international treaty, and we can only put up 2 per year. So if we miss one, well, then we're going to have to just have 9 of them, not 10. And that's going to mean less money, but that's not going to mean that we are not supposed to fulfill the milestones and the targets because the treaty is still there. We would have to drop the whole thing. So there are some subtle mechanisms that we believe that will overcome whatever political hardships we might face.
Thank you very much. And I believe we had one question from the online audience. So we'll probably take that as the last one.
Yes, so how did the COVID-19 and the war in Ukraine influence your RRP? Well, COVID-19 influenced it because it exists because of COVID-19. It was a direct response to the pandemic, but the war in Ukraine did influence it in a way that in some sort we knew that the war in Ukraine is an energy crisis, and we're preparing for energy crisis because that is connected to the climate crisis. Because fossil fuels, whether they're Russian or German or whichever country, they are not to be supported by the RRP, and RRP is trying to replace them. So we are basically running ahead of this challenge, but of course the scope of the war in Ukraine and what it means, no RRP could have predicted, and we still have some mechanisms to follow. It is not war economy, we have rules, there's auditors that come, so we need to really take it properly. But what is happening, and it was announced, would be a new chapter to the RRP called Repower EU, which is under negotiation. It was a mechanism basically proposed to put some money from the ETS, from the reserve that is in the ETS, which means you sell some of the carbon money. You sell it, you get the money into the budget, you give it to the countries, and they're supposed to say what else are they going to do with the money to get less fossil fuel dependent, meaning fossil fuel from Russia dependent. Right now the negotiations are ongoing because we are not satisfied with the amount that would be given to the various countries for the targets we're supposed to meet, and we're not satisfied with the distribution key that is supposed to be used. But the RRP or RRF mechanism is supposed to be used to distribute this money. So we would open the plan, we would enter a new chapter, put in new investments, put in new reforms, and that is the response to the war in Ukraine. But I believe that right now the energy crisis is a bit less about investment and more about the reform on the European level. So that is a little bit next to us.
Thank you very much. Okay. Thank you. Now I will ask our next speaker. Our next speaker is Ms. Katharina Kazashova. Katharina is Managing Director of the Auditing Oversight Authority in Slovakia. By the way, Katharina was also voted Manager of the Year in a Trend magazine competition. Yeah. And Katharina is also our dear ACCA member and ACCA ambassador. So we're very happy to have you here. The floor is yours. Thank you.
Thank you. Okay, thank you for introducing me, and good late afternoon, ladies and gentlemen. Let me start with a quotation from the ACCA research report Jamie has presented a few minutes ago. Accountancy is a superconnected profession working with governments, regulators, educational establishments, trade organizations, and donor communities around the world to build capacity, support international trade, help accomplish sustainable development, build financial literacy, and stop corruption. I'm very happy to see regulators in this sentence, as I have been here not only as the ACCA member, but also as a regulator. I was already introduced as the head of Auditing Oversight Authority in Slovakia. And by the way, who likes regulators? Someone in this room? Anyone among those participating online? I guess I would have counted you using fingers of my right hand. Perhaps Slovak auditors would be brave to say, yes, we like you, but that's it. However, as demonstrated also in this ACCA report, regulators are the relevant component of accountancy ecosystem. And this is what I would like to talk tonight about. Before we start, a couple of words about how is accountancy regulation organized in Slovakia. Because we are a member of the European Union, Slovakia is subject to the accounting, auditing, and financial reporting requirements established in the EU regulations and directives, transposed into Slovak national laws and regulations. Accountants, as a profession, are not regulated in Slovakia. However, the requirements for preparation of financial statements, including applicable accounting standards, national or IFRS, and financial reporting thresholds are stipulated in the Act on Accounting. It means the Ministry of Finance is responsible for enacting financial reporting standards in Slovakia. Situation is different with auditors, because certified auditors are regulated under Act on Statutory Audit. And this Act, beside other topics, I'm not going to list them, says that professional standards auditors should apply are international standards on auditing, as issued by the International Auditing and Assurance Standards Board. This law also created Úrad pre dohľad nad výkonom auditu, Auditing Oversight Authority, as the independent audit oversight body responsible for overseeing statutory auditors and audit firms, activities of the Slovak Chamber of Auditors, and public interest entities and large companies in area of their audit committees functioning. The ACCA research report points out that in the era of advancing standards and regulation, it's now the right moment to start promoting global standards that are harmonized. It means with shared definitions, simple, avoiding disclosure overload, and aligned to international financial reporting standards. Let's try to explore together what is the role of regulators and how they have been contributing to global standards with these three qualities. We all know that good financial reporting standards are crucial for informed investor decision-making, for efficient capital allocation, and for trust in business. However, is it enough, or do we need to improve transparency and understandability of corporate reporting, and perhaps go beyond financial reporting? The answer seems to be a call for more and more extensive non-financial reporting that helps organizations telling their corporate performance story more effectively and understandably, as you can see on the picture. We should be carefully listening to the forthcoming panel discussion with representatives of leading Slovak companies on sustainability in finance. Their experience may indicate whether the expectation gap between regulation and business needs has been widening or closing. I structured my contribution into 4 blocks: financial reporting, non-financial reporting, assurance services, and then a few general sustainability and ESG considerations. What is new in the financial reporting regulation? Many of you are aware of the European Single Electronic Format, SF. It is the reporting format in which issuers on EU-regulated markets shall prepare their annual financial reports from 1st January 2020. The responsibility to develop regulatory financial technical standards was given to ESMA, European Securities and Markets Authority. ESMA requires that financial information are structured according to the SF taxonomy, which is an extension to the IFRS requirements for information tagging. Those who are interested, the IFRS taxonomy is available on the website of the International Accounting Standard Boards, and the corresponding taxonomy for SF is available on the ESMA website. And now, key question. Why the EU introduced SF via the Transparency Directive? The aim is Europe-wide comparability and increased transparency. It sounds great. By structuring financial information in a standardized way, reports should be more understandable, accessible, and comparable. They should simplify work for analysts, investors, and other stakeholders. What is the role of auditors? Among other requirements, auditors should check that tagging complies with SF rules and that the company used an open standard that enables a single document to provide both human-readable and machine-readable data. Therefore, auditors have an important role in order to ensure that digital disclosures accurately reflect the content and meaning of the report. Non-financial reporting. We've already started with Christina. Non-financial reporting has been evolving over time and over jurisdiction. It's nothing new. The current situation in regulation of non-financial reporting in the European Union is as follows. The EU is ready to adopt the Corporate Sustainability Reporting Directive, CSRD, in October. CSRD is amending the previously applicable non-financial reporting directive, and it supports the European Green Deal. And as such, the CSRD is a part of bigger sustainable finance package that includes the EU taxonomy. By and large, the CSRD aims to ensure that companies publicly disclose in a dedicated section of company management reports adequate information about the risks, opportunities, and impacts of their activities on people and on the environment. CSRD introduces more detailed reporting requirements on environmental, social, and governance sustainability topics for all large companies and all companies listed on regulated market. Who will be responsible for establishing European sustainability reporting standards? EFRAG, European Financial Reporting Advisory Group, of course following technical advice from a number of European agencies. What we know at this stage is that reporting standards will be framed by 3 sustainability topics: environmental, social, and governance, and by 3 categories of standards: cross-cutting, topical, and sector-specific standards. And one may ask, and it would be probably a very legitimate question, why the EU is not going to adopt international sustainability reporting standards that are under preparation by the International Sustainability Standard Board. Today, for example, EFRAG Sustainability Reporting Board is discussing the appropriate materiality approach. And also today, a very critical article was published saying that CEOs and CFOs of large companies are of opinion that the current European drafts, not yet adopted, are too much and too soon. They stress that at present, the European draft standards do not refer to the international standards, and that aligning the European and international standards to the greatest extent possible will facilitate comparability and analysis, improve transparency, and minimize reporting burden. They also declare that companies who are subject of CSRD reporting are in favor of phase-in period, because data they should disclose are too immature or new to measure, and that they need time to define and implement the technology and processes needed for robust reporting. Do you remember a slide about expectations presented in the ACCA report? Global standards that are harmonized, simple, and aligned. How far these activities are from this desire? I hope this will be a wake-up call for EU regulators, especially standard setters. The non-financial information must be independently assessed and assured, because strong assurance practices are vital in helping mitigate greenwashing. Who will ensure the quality of reporting under CSRD? Big change. Reporting will have to be certified by an accredited independent auditor and potentially also by an independent assurance services provider. It's new, not only auditors. Auditors should perform assurance engagement on sustainability reporting. First, on the compliance with reporting standards that are not yet fully drafted and adopted, and then on the process, how the company identified the reported information. I've already mentioned that in Slovakia and also in many other EU countries, assurance services are provided in accordance with international standards on auditing. In June, the IASB supported development of a standalone standard consistent with international standard on assurance engagements, 3000 revised for assurance on sustainability reporting. It's a big difference in comparison with reporting standards. Good news is that the standard or standards will draw on material in the existing IASB standards and guidance, of course with enhancement and specificity to address both limited and reasonable assurance on reported sustainability information. By the way, who wants to know more, the ACCA organizes 29 September a webinar implementing the EU CSRD. Do not miss it and use the opportunity to discuss impact for the profession with Sven Gentner, head of the Corporate Reporting, Audit and Credit Rating Agencies unit at the European Commission, and with other participants. And now, a couple of words about regulation for those who are auditors. ISQM is a new set of quality management standards which were prepared with a focus on public interest and with the hope of addressing audit failures and scandals. So far, 2 standards have been published. In a similar way, in which auditors expect their audit clients to be well organized and to have strong internal control systems in place, the auditors themselves are required to have implemented robust internal systems of quality management. The ISQM standard replaces the standard ISQC. It means moving from quality control to quality management. ISQM adopts a proactive attitude to quality rather than a compliance tick box approach, which has been the main criticism of the current ISQC1 standard. The key feature of the standard is that the required approach is risk-based. It makes the standard scalable for a whole spectrum, from small audit firms to large multinational networks. And before we pass the floor to discussion on sustainability in finance, I would like to touch sustainability and ESG a bit provocative way just to warm up the discussion of our panelists. Have you seen the title of an article published in the CNBC 1st July this year? The title said, Elon Musk is smart, but he does not understand ESG. This article referred to removal of the electric vehicle maker Tesla from the S&P 500 ESG index, and to Elon Musk's description of ESG as a scam that is being weaponized by phony social justice warriors. This is just one example of many discussions about ESG and goals connected to sustainability. What might be the problem? First, some may not distinguish between sustainability and ESG. Yes, ESG and sustainability have some similarities because they both address the environmental and social aspects. However, there are some differences. While sustainability may mean different things to different entities, ESG is about the specific set of criteria to define environmental, social, and governance systems as sustainable. Sustainability is applied as an umbrella term of doing good, what translates into ethical and responsible business practices. In short, sustainability means taking only what you need and leaving systems capable of continued existence. ESG points to a specific set of criteria, and as such, ESG is a preferred term for investors. ESG seeks the identification and ranking of undertakings that show desirable characteristics, and these characteristics are broader than what is considered in sustainability because they extend to directors' pay, diversity of stakeholders, treatment of workers, community engagement, health and safety issues, and many others. Second, some may ask questions as a friend of mine did. Mr. John Sutherland, a former chairman of the Audit, Risk and Supervision Committee of the European Investment Bank and a senior advisor to the Financial Conduct Authority and Bank of England, has published an interesting podcast declaring he's confused by ESG. And if he is confused, it's worth to pay attention. What is his problem? He wonders, no one has decided which of E, S, and G is the most important. He elaborates, at the end of the year, thanks to good governance, G, and of course thanks to you, CFOs and accountants and auditors, the company achieves and reports profit. Only with its profit, shareholders have choices using it by buying dividends, shares buyback, increasing executive remunerations. With no profit, choices are limited. The rest of profit may then be used for development of the business via investment in research and development, increased salaries, paying trainings for employees, changing suppliers, support local community and environment. Many stakeholders to choose. And this is exactly the moment when S, social dilemma, who to support, comes to the scene. It means good governance enables to recognize and prioritize stakeholders, and either we like it or not, E, environment, is just one of them. Therefore, he asked two questions. How can you have E, environmental, without first having sorted out S, social? And how can you sort out S, social, if your G, governance, is not great? In his holistic view, the order should be G, governance, profit in brackets, social, environmental. Because without good governance achieving profit, and without sound social checks and balances in appropriating it, E would not be supportable. And maybe this is something you may think about, dear panelists. Conclusion. Let's come back to the ACCA research report. The report says that the accountancy profession will be integral to regulatory reform, working to develop regulation, standards, and reporting requirements. I can only agree. Our profession is the profession of future. However, we need to go beyond debits and credits, beyond ticking the box auditing exercises. We need to think in wider context of the accountancy ecosystem, including regulation. It is you, accountants and auditors, who understand the business that is making disclosure. You understand accounting and other reporting standards and their appropriate application. Therefore, it would be vital and useful if you, accountants and auditors, are active when new draft regulatory standards are published and commented. Once they become part of the EU or national legislation, it's too late to complain. I understand that a cooperation with regulators might not be very popular, but it's definitely beneficial for your clients as well as for yourself, the accountancy profession. Good luck and happy to answer questions, if any.
Thank you very much. Thank you very much, Katharina, for your presentation and also for your thoughts, which will nicely lead to the discussion, I believe. Ladies and gentlemen, do we have any questions on Katharina at this point? Okay. If not, so this will be the end of part 1 of our conference. We will now have a very short break of 5 minutes. We will change the setup a bit and we'll start with a debate. So thank you very much and please be back in 5 minutes. Thank you.
Victoria became ill, first he had to stay in, which was unfortunate. That's quite a weekend.
Gentlemen, as the most enlightened, forward-thinking professional accountants of our generation, I want us to form a professional association that will be open to everyone.
You mean everyone?
Yes, everyone with ability, ambition, determination, and courage. Everyone, regardless of background.
Interesting. So how do we determine who becomes a member?
Examinations of the highest caliber, preparing our members for the demands they will face now and in the future.
Wisdom comes from experience, Arthur. If we want the best members, they'll need some years of that too.
Yes, examinations and experience. Our members will know what is right and fair.
It'll be hard work.
It'll take several years to become a member, but think of the caliber of all those that succeed. They will be outstanding. They will be a force for good.
Oh, yes, well done, guys. Well done.
You know that your everyone will have to include women.
But women aren't allowed to vote, Arthur.
Exactly why our association will be the first to welcome women members.
You'll need the examinations and the experience.
You think women incapable of these things, sir?
I believe you are more than capable, madam.
Women are capable of anything. Women will vote. Women will be pilots and prime ministers. We will lead countries, businesses and organizations around the globe, including this association, where there will be as many women as men, probably more. Checkmate, Albert.
Goodness.
I take it that you will not be limiting your membership to our shores.
Think what advantages our diverse membership will bring. Wisdom drawn from multiple cultures, experience gained by employment in many varied industries, but all unified by a single recognizable qualification.
Global membership will mean global standards.
The same examinations for all. So how do we deliver them?
The railway network is expanding fast.
Unless you dig a tunnel to France, we'll also need ships.
Once the Wright brothers manage to stay up in the air, we can fly them.
We already send things through wires. Or there's the wireless.
That's how we'll deliver them. By thinking ahead and embracing technology, we can overcome all barriers.
Everything changes. There will be things in the future that we can't imagine.
Like more women in the profession than men?
Even the humble typewriter will evolve.
Our qualification will evolve too. It will always be relevant, so our members stay ahead throughout their careers.
Ladies, gentlemen, my fellow members, some of you might say that numbers make the world go round. I don't know about that, but I believe there is strength in numbers. Our first 100 years saw us grow to 100,000 members. Just 13 years later, in October 2017, we became a global family of 200,000. 200,000 equally qualified professionals, equally equipped, equal in knowledge, equal in wisdom, able to act in the public interest by upholding the very highest ethical and professional standards. To mark this historic milestone, a vast wall containing all 200,000 names has been constructed, and I invite you to celebrate with us by finding your names amongst those of your fellow members. Every single one of you has played your part in this great story, and I am so proud to stand with you now and to have played my part too. I wish you good health and great success on your continued journey.
Okay, ladies and gentlemen, so please let us start with the panel discussion, and I will give the floor to our moderator, Sonia Muzikarova. So, Sonia, the floor is yours.
Thank you very much, and also thank you very much for organizing this great event. I think it has been very valuable so far for all of us. So, good afternoon or good evening, ladies and gentlemen. I'd like to welcome you to this segment focused on sustainability in finance and its impact on various economic segments. ESG really remains at the center of the attention and has for some time, as we have also heard today on multiple occasions. Russia's war in Ukraine, as well as the energy crisis that's upon us, has played some extraordinary urgency on de-weaning from Russian fossil fuels, seeking clean alternatives, and at a very short schedule, shall we say. Over the long run, it should accelerate the green transition, transition towards clean mobility, and hopefully also forge a lasting change in consumer behavior. And it will also mold the ways in which businesses operate as well in the short run. It will also inflict some pain on our economies, unfortunately. And to top it all off, as we have heard, especially in the late presentation of Katharina, ESG has been dubbed as ineffective as a paradigm by some leading commentators, business experts, business persona, and observers. I would perhaps allude to the recent title page of the forerunning magazine, The Economist, which has said that ESG are the three letters that won't save the planet. So we have a ton to talk about today with our excellent and diverse panel that I would like to introduce now. To my right is Mr. Tomáš Messinger, who is the head of ESG and sustainability in HB Ravis, or HB Ravis, or I'm not sure whether you translate your organization names. Next to him is Mr. Boris Kostík, who is the director at Wood & Company and also a head of Etherus Capital. Welcome, both of you gentlemen. Then we have Mrs. Dominika Hranická, who is the sustainability coordinator for ČSOB Slovakia Finance Group. Welcome, Dominika. Next to her, we have Mr. Marek Mikolaj, who is the partner at EY Slovakia. Welcome. And last but not least, we have Mr. Roman Filipu, who is the Chief Financial Officer at SPP. So we have a very pertinent presence today from different industries, and we will have, I'm sure, a ton of perspectives. My name is Sonia Muzikarova. I'm an economist and a policy advisor. So let's delve into it. I think we have established today that sustainability is at the forefront, but so are organizations. Organizations, the private sector is really being scrutinized and held accountable when it comes to the environmental footprint, when it comes to their efforts on the sustainability front. And also ESG framework greatly reflects on organizational brand and how is it viewed by investors, suppliers, the business community. And I'm sure implementing a viable ESG program or a strategy is not a walk in the park, and especially under these circumstances that we see today. So my first question to all of you, to set the scene a little bit, is how has sustainability been a part of your day-to-day, also a part of your broader business strategy, and how has the quest for sustainability in general perhaps affected your business? So maybe let's start right next to me with Mr. Messinger.
Good evening. Thank you for being here with quite not common audience for me, as I'm not from the financial sector. Our sustainability journey starts actually maybe 10 years ago when we decided to certify our first project in a BREEAM certification scheme, what is proof of that your project is sustainable. And this was probably first project certified in such a scheme in Slovakia. And since that time, we certified probably all our projects in such a scheme, whether it's BREEAM or LEED, depends on the country and more of the interest on the market. And for 10 years we were doing it, and 2020 was quite breaking years of thinking where we are going to move our sustainability approach. And we decided to establish our first ESG strategy. So look at this topic a little bit more, let's say, from holistic view, corporate view, not just the project one, and also from more strategic view. And I can say that it was not an easy process to at least understand the framework, understand how to set up the proper actions we would like to take. And it is the journey we started in 2020. In 2021, we published the first ESG strategy online on our website. And I mean, we are still working on improving the strategy to be more impactful and also to be able to address the stakeholder needs, which we are working with. And the question was how it affected our day-to-day operation, and it affected, yeah. So ESG is a much wider topic than the sustainability. So addressing the topic on the level of project, I cannot say that it's easy, but it's much easier than to bring the topic on a wider group perspective, mainly because it's such a wide topic that it needs to be addressed across almost all departments in a company. So it's not the way that you will find sustainability officer and he will solve all the problems. So I think that implementing ESG strategy brings changes in decision-making across all departments in your company and very big involvement and passion of the people. So this is mainly our experience.
Thank you. Boris, maybe through your investment prism.
Good afternoon, ladies and gentlemen. Thank you for the question. Maybe I will start to put this question into the context what we do. We as an investment company, as a wooden company, we act predominantly as a long-term investors. So we are preferring long-term investments, which should reflect as a sustainable investments. As also from the fundamental principles, this approach should be less vulnerable to the market sentiment and short-term ups and downs. So. And this strategy applies as well to the real estate portfolio, as well to the production companies. In the real estate companies, we joined the journey in 2017, 2018, and since that we've been, we already noticed a high demand of our clients in the office centers that they were fighting or demanding sustainability issues or topics, so invested a lot into the sustainability business certifications, as Tomáš said, BREEAM, LEED, energy efficiency audits, measures, as well as some charity and some community services activities. Maybe I see a little bit difference between the real estate and other private equity businesses, but what is, I think, very connected, sustainability / ESG, I'm looking forward to discussions after this session, especially with Katharina, is that maybe ESG is much more applicable for the real estate business, because in my world, I consider the investors into the real estate as a value-based investors who, should I put it in some idioms, maybe they are concerned or interested what will happen in the next decade rather than the next quarter. So they are prepared to understand the principles of long-term investment and also understand that some such significant changes will take some time, so it's not from one day to another. To support Katharina, in my world, I'm still struggling with the ESG, long-term sustainability, all of these buzzwords, but I have to confess and admit that we are struggling sometimes with the right approach to, or it's still challenging to find the proper terms and conditions and the scorecard and the ESG metrics to be analyzed, to be set up, to be put into place, and to be put into real life and measure and implement. Because I don't think there is a one tool for everybody. I don't think that the principle one size fits all exists or solve the situation here. So each time we're doing ad hoc basis, it has to be a tailored decision or some solution. The question was if we are affected or how we are affected. So we are monitoring the situation. But of course, we see the benefit there. The benefit, basically the philosophical one, is that you don't have to make the choice between, I would say, being ethical and responsible and earning some money. So basically, you should combine these two elements. ESG should / sustainability should deliver both requirements. And I also believe, especially these days, the ESG factors can bring you something we can call definitely financial bottom line, you should earn some money. That's the first thing, but you should also benefit, and it will affect your, I would say, reputation. And if you are being compliant with ESG, it should help you to boost the brand recognition and promote the brand loyalty. But just to be also controversial, for me, it's not about the ESG, but it's very hard to achieve ESG if we don't have cash flow. So happy to discuss later on. Thank you.
Yes, you'll be definitely pressed on some of the pertinent points that you have made. But let's visit this through the banking prisms. Dominika, what is your take? How has it affected your both day-to-day and a long-term strategy?
Thank you. Good afternoon. Sustainability is a new topic for ČSOB. KBC as the parent company has been active in this agenda since 2017, when from top management come the initiative to focus on sustainability from the different angles. Also, KBC signed the collective commitment to climate action in 2019, so ČSOB agreed to align the portfolios and business strategy with the Paris Agreement to keep global warming below 2 degrees. Of course, for the daily processes, I can mention the basic things as the decrease of water consumption, paper usages, but reality is that now we have a huge agenda about data gathering and reporting. It's not only for external commitment, as it was mentioned, CCCA, however, also for regulatory reporting. ECB stress testing was new in the end of the last year. We are waiting for CSRD, as it was mentioned in previous panel. It's really hard to collect the data which do not exist. It's really hard to prepare proxies from nothing and to have huge assumptions. Yeah, it's challenging, and we will see how the reporting will look. But also in banking industry, new thing are the green solutions, or I would say environmental friendly solutions, which I think the most of the banks currently offers. We see that for our clients it's important to have also this type of product, but we are thinking about also advisory. So, for example, ČSOB will start with new product, what is ESG analysis, with gap analysis, focusing on the missing part in our clients' companies, where the ESG strategy should be applied. And also we have external partnership with experts who are able to prepare environmental projects and respective documentation with it. So, yeah, that's...
Okay, well, it seems both quite substantial in terms of both scale and scope, but perhaps we'll have time to get into the details. Mr. Mikolaj, through your prism.
Thank you. So EY is an international big company, and sustainability has a big impact on us. When we took it from two perspectives, first of all, we do realize that climate change is a big challenge for the society. So we as a global company put in action a number of years ago plan how to decrease our carbon footprint. And we can proudly announce that already a year ago, EY is a carbon negative company with a commitment to become a net zero in 2025. When we look at the business side, it's a huge opportunity for us, but also a challenge. I would not say anything new that sustainability services is the fastest growing sub-service line globally. But at the same side, as the topic is so broad, we need to increase our competence and hire new people and acquire the talent. And we are fighting for the same talent as any other company on the market. So, for example, when we look at the environment, it's not just about the climate change, it's about the waste management, circular economy, or biodiversity. And I'm really proud, for example, that we managed to hire experienced senior expert on biodiversity locally in Slovakia. The last comment is about the transparency. We are saying that what's more important, E, S, or G? It's difficult to say, but what is important is increase the level of the information the companies are disclosing. Also, we realize it in our locally, and we try to lead by example. So we are now preparing our local ESG report that will be published within coming weeks, and that's our also contribution to the sustainability locally.
Thank you very much. I'm sure we'll be all very curious to get some tips from you, how you have managed and achieved to get carbon negative. Yeah, we'll take some lessons from you later on. But moving on to Mr. Filipou, through your very interesting and very pertinent and timely prism, how has the quest for sustainability affected your both day-to-day and your long-term strategy?
Okay, so I will be the negative skeptic here in this panel. So I'm working in SPP infrastructure, which is not the state-owned SPP, for God's sake, never. And we do infrastructure things. So we transport gas, Ustream, we store it, nafta, Pozagas. We deliver it to every household, every company, SPP Distribucia. And I'm also a board member in Stredoslovenská energetika group. So we do gas and electricity, and we're working with ESG a lot, so we are certified. I think we are the first company, if not the only one, certified by a big rating, like you know the ratings, Standard & Poor's, and everything. So we got this rating for ESG as well. So we're number 6 in Europe in utilities. So we do a lot. So in 2010s, nobody cared about ESG. In 2020s, all the meetings with investors that we have, everybody has ESG questions, and a lot of them. And then after the ESG questions, we get to performance questions, and then they ask, why did you have a bad year in performance? And we say, look, our workforce is quite old people, because the young people don't want to work manually anymore, so we have a lot of old people, and it was a hard winter, and they work outside, so they were sick, so we have a difficult performance this year, and they look like... and can't you fire these old and sick people so that we have a better performance? So this is the ESG that we are talking about. So it's placebo is a mild thing for me for saying the ESG, and this is the social thing. If you look at the E thing, then we are in this energy crisis because we get people like Greta Thunberg lead the energy policy of Europe. Luckily, there is, I don't want to be unpolite, but luckily there is something to blame. So luckily for the politicians, there is a war in Ukraine, so they have to blame Putin for unreliable energy and for insufficient energy. Because if there wasn't a war, they would be looking very stupid because they caused it. So this is not an outcome of the war in Ukraine, which is happening now. This is the outcome of the environment greenwashing, which is going on. So it's very harsh, it's very quick, and it's not possible because the companies, what they normally do, they put some solar panels on the headquarters, they tick off the E, and they outsource the production to China, where they manufacture it on coal, with no human rights, with no safety equipment. So this is the ESG that we're doing in the companies, and then you have a strong pressure, and you are in Slovakia it's not so harsh, but I have a very good friend who is a commercial director in a multinational company based in France, and he says we had a meeting and now we were discussing ESG, and they told me we should do non-gender toilets. So you have cabins and everybody can use them, so you have men and women beside, and they say, I would mind. They said, so would perhaps my colleagues, but I was the only one who voiced that I don't want non-gender toilets. And then his report came out and his performance was blamed that he doesn't support group strategy projects like the ESG standards, because he was the only one to say, I'm not in favor of this. So I don't think this is a good way. So maybe I'm old-fashioned, but and maybe I'm the only skeptic here. But this is my point of view on ESG. Thank you.
Thank you. I think you have really illustrated quite well how broad the issue is. But let's switch gears here and we'll get to some of the things you have alluded to. It has been mentioned today several times, the past summer with record temperatures and wildfires and extreme weather events all over the place, even in Europe. And in some sense, it does seem like the window of opportunity to change the course quickly is closing upon us. So, and you have alluded to that as well, is the responsibility of policymakers and politicians and the responsibility of business. So since we have business people at this panel, I would like to ask you, and perhaps I will start with Boris here, whether you think business is doing enough, and really, what's the role of business here really? Is it marginal? Is it leading? What's your take here?
It's not an easy question. Frankly speaking, I do think the world as usual is not a black and white. And especially in such a complicated and comprehensive agenda where so many subjects, so many stakeholders, so many policymakers, it's hard to find the equilibrium between the pragmatic business approach and the measurable ESG agenda. Maybe I would stress the word measurable, because for me it's the one of the crucial component there, which complicates entire discussion and entire, I would say, takeaways of the if it's good, if it's bad, if it's somewhere in the middle. What I'm confident and sure about is that the business, as a matter of principle, is naturally being forced by the global marketplace, by the competitors, by the suppliers, by the customers. They have to be efficient, and it's pushed to the greater efficiency and cost reduction. Maybe just one example, in one of our portfolio companies, we succeeded to reduce significantly electricity consumption from, I think, 21 gigawatt hours to 17 gigawatt hours, which Roman knows it's a huge amount of electricity. And we did it. I like it. It's measurable. You can quantify the impact. You can quantify the benefits for all stakeholders. You can quantify the carbon footprint. But we did it, and we didn't know it's ESG, because it's just natural. We just try to be rational. We try to not to misuse the resources. We try to be confident and consistent with what we talk to the employees, to the suppliers, to the shareholders. So we did it. And from my perspective, I'm right-wing guy, and I don't think that the business in this respect needs additional pushes and some motivations from the state, from the authorities, as these objectives should be enforced by, I would say, naturally. Where I still find the situation challenging are some social and governance criteria, when it's sometimes really hard to agree on the specific criteria, specific KPIs, specific components of the scorecard, and also driven by the fact that in some, just stupid example, in one agency we have to report the hours invested into the personal development. In the other agencies we are reporting the costs incurred in training. So. But the business basic is the same. Basically, you have to devote some time and energy and efficiency to the people. So I think that we are still in the, maybe we can say something like infancy or childhood level of the life of the ESG metrics. But I think that we need some standardization there, and it has to be normalized across the territories, across the countries, across the peers, across the sectors, because sometimes we are just comparing apples and oranges. Maybe what's also crucial, and I'm in somewhere in the middle of what Roman is saying, and in my opinion, yes, this is exactly the point, that you feel natural pressures that you have to be efficient, and you are doing something which is ESG, but you don't know is ESG. But then we have the situation, and again, it's real life lessons. We as a pharma company are competing with the guys from India, from China, and basically they don't care about the ESG, about the taking anything in this topic, but we are competing in a global marketplace with them. So I am sustainable and trying to be responsible, but if you are facing some global conglomerates who basically do not care about this one, it's really hard to find, I would say, pragmatism and you try to do your best, but sometimes it's really challenging.
Thank you. Mr. Messinger was nodding as you were speaking. So do you agree fully with, do you identify with Boris' account, or what is your take on like whether business is doing enough and what they can do maybe more or less to stay on track?
I completely identified with many of the things which were said. Actually, we are private-owned company, not regulated business, and I mean, to meet legislation requirements with our project, it's quite easy. It's even easier than achieve BREEAM certification. And actually, it was the business who pushed our aspirations in terms of ESG further. And mainly, it was the UK business, because we are active at the UK market. And it was not that far, maybe 3 years ago, when you negotiate contract with your potential client and tenant. The first measures you were discussing was location, square meters, price, maybe rent-free, and the others. Today, we are starting with discussion of sustainable credentials of the project, your approach to sustainability, and if you not pass this exam, you will not follow with these business discussions, because for our clients, who are mostly big corporations and companies committed to achieve some ESG targets, it is the crucial topic. So we are pushed by the business, and we are trying to address the needs of our stakeholders by our ESG.
Thank you. I would now turn again to our more on the finance side of things. We know that a meaningful adoption of any climate strategy requires significant financial investments with long-term returns. So, Mr. Filipou, coming back to you, should finance teams pioneer and drive the change? And given what you have said in your introduction, how should such change look like in your view?
It's. I think there can be some projects in this respect. The financial team can see the first, like Boris said, you can see the savings. So if you don't have an insulated buildings and you know the energy consumption is big, so maybe the financial controller sees many buildings and then it looks like, why does this building consume so much energy? And then he can use the same experience from the other ones and bring it back to the one which is energy inefficient. So the people on the site don't see it that it's inefficient, but you as a financial controller, financial guy, have the experience or have the overview of many projects that you have. Unfortunately, being sustainable or being green is not something that you can financially compete with coal or nuclear. So it's that's why we have like it was presented for the Ministry of Finance. So we have the money printing schemes in the EU that they print a lot of money and then they give it like a Green Deal, and then we have some projects we can finance, because we have a project in one small village where we are testing hydrogen. So we are mixing hydrogen into natural gas, and the first thing where we said our pipelines are quite good, nobody has such a big experience in Europe, let's test 20% blend, so 20% hydrogen, 80% natural gas. And we found out that the people don't have appliances, so we went door to door and we asked the people, what boiler do you have? And they gave us some papers and we did some inspections and then we found out let's test only 10% because the boilers are old and nobody has a certification, and even new boilers don't have a certification for more than 10% now on the market. So nobody wants hydrogen because it's very expensive, and that's why it's very difficult for the financial person to find an investment project, because it's not financially feasible unless there is a subsidy from EU. So this is the only way how to be green at the moment, if you compete with other people like India and China.
Right, thank you. Dominika, maybe through your prism of the banking sector, how can organizations or even finance teams deliver financial returns while generating positive value for the society? It has resounded several times throughout the discussion that to some extent these two objectives are viewed as somewhat conflicting, at least to some extent. What's your take?
During our environmental analysis, we contact clients and we found out that green cabins have been already done in past years. That means that now it's time for larger investments, long-term investments, and the results will be long term. We can see that there's the resilience plan, there's additional EU schemes. Clients would like to apply for them, but the conditions, for example, from EU taxonomy to have green investments are really strict and really hard to be compliant with it. But we can see that clients are trying to have green investments or to invest to the new technology. Sometimes it's in their strategy, sometimes it's because the Slovak legislation is changing, so in some sectors they had to do that. For example, agriculture or chemical industry, so they need to do that. We try to adjust our products to these new long-term loans, as we can see that 20 years maturity, 30 years maturity will appear more often than it's now, and we need to adjust not only our products but also the whole credit process. So this is something we need to adjust.
Right. Shifting gears a little bit here, it is kind of an unspoken wisdom that in order to achieve progress in anything, you need to measure it, right? So turning to Mr. Mikolaj, how do you measure success and or progress when it comes to sustainability? What are some of the efficient tools that you either have or you have seen? How can this be done successfully in your view?
Thank you for the question. I fully agree that if you somehow would like to move from one place to another, you somehow need to measure it, because you need to know whether you're progressing well or not. When we speak about the sustainability, there are a lot of areas like environment, social, and governance, and we need to get used to new measures that was not known in past. Nowadays, for example, carbon footprint is becoming a market standard. So many knowledgeable people know already what is a scope 1, 2, 3, and it's not unusual that it's being measured. When we come to the social, there is still a lot of unknown, but we already see increase from the companies to measure also the social impact, so social economic impact of the company on a society. So it's something that it can be measured. You can measure what is your contribution to the employment, what is your contribution to the state budget, and so on. So this is a new measures that are coming, and when we look at the Corporate Sustainable Reporting Directive, there is a broad range of the area that will become a standard. So I would say that people are resistant to the change, but we are at the edge or in a position when the change will come, and it's really unnecessary, it needs to come.
I would now like to shift gears again back to ESG and the framework and what it is and what it isn't, and most importantly, whether it's effective in advancing sustainability goals. So one could say that it is a well-meaning effort to improve capitalism, for it to work better. But someone else could say, at the same time, it does set a plethora of goals and sometimes even conflicting goals. It lumps together investing, how workers are treated, who sits on the board, gender balance, and many other things that I haven't listed. So my question to you, and I will again start with Tomáš and Boris, what do you think, does it work? Has it worked so far as a framework to really meaningfully advance sustainability in organizations, 1, and 2, is there a scope for improvement, and if so, what is it?
Okay, so we already heard that there is a space for improvement. Actually, the ESG is quite a new topic with a lot of small illnesses which need to be fixed, of course, but there is also a sense of urgency. Actually, I was on one ESG event last week in London, and there was quite nice measure set that we are living at the moment the way that we are using resources of 1.7 planet. If we will use the way that people in London living, we will use 2.5 planet. And if we will use the way the US lives, we will need 5 planets to be able to make it sustainable. So I think we need, I mean, it's not perfect at the moment, of course, but we need to start somewhere. So we need to bring the common sense, of course, into the thinking about our sustainability. We need to look at where the impact is, and we need to analyze our impact and focus on the things which has the impact, not which are nice in a report. And that's probably the way how to approach.
Yeah, this is also getting back to what Katharina was saying, to reshuffle the letters from ESG to GSE. I mean, it's a good, interesting perspective and food for thought that you first need to have the first two in order to be able to environmentally, make progress environmentally. So what's your take, Boris? I mean, I'm sure you have thoughts.
I don't want to repeat myself, but I think that to the certain level, everybody from the business community has to apply the ESG, just because of the global marketplace, just because of being, I would say, sustainable and reliable in the long term. Maybe we are not using the right word or the correct word, but it's the nature of the business. What is new from my perspective, and what I consider as a game changer, or what's reshaping the game, in my personal opinion, it's the new approach of the new generation, millennials and Generation Z, as a consumers, employers, and employees as well at the same time. So I believe we all agree that human capital is probably the most precious component of any value of any business, of any value chain. And just as a matter of principle, if you want to keep retain the talent, attract the human capital, you simply must create the conditions which are fair, which are equal, which are diverse, which include inclusion, diversity, and so on and so on. Moreover, these guys are also the purchasing power of your products, of your services, and basically they prefer sustainable or ESG okay solutions, and they prefer the producers, the manufacturers, the suppliers, the traders, blah blah blah. So basically, you are also forced as a matter of market supply and demand. And these people naturally give a greater emphasis on the sustainability and social concerns when they are making their decisions. And of course, if you also want to apply them or attract them, they are considering these factors. So it's not anymore about the paycheck, about the salaries. Decision-making process is completely different, and completely different to my generation, I would say. And of course, if you have to combine all of the puzzles in the game, you as an investor or shareholder, you want to have as low as possible cost of debt, cost of financing, cost of equity as well. So basically, you can't ignore the ESG issues during your negotiations with the providers of these facilities. So in the ideal world, all should make sense, all should be nice and sexy, and all these factors should be factored in somehow and should benefit. But and now probably back to the question about the conflicting goals. I would tend to agree, yes, they are. Maybe just an example, if I can compare it to the, I would say, typical psychological Maslow type hierarchy of public and private sector needs. Some people argue that the importance of the ESG will fall or has already fallen down as the reflection of the actual and imminent threat and the situation basically we are facing for the moment, and they think that the business will go back to the basic fundamental elements, to the reporting, simple elements, very, very, very elementary one. What I consider very challenging and special for the CEE region, maybe Slovakia, is that so far we have been focused, I would say, just financial bottom lines like EBITDA, earnings, and things like this, which was the alpha matter for everything to consider which is good, which is bad. However, in the upcoming situation of the I call it perfect storm, with the inflation, with the increased rate of unemployment, with the geopolitical issues, basically I think it's not unrealistic to think that people will not be able and will not be willing to pay for such a comfort of being taking care of the planet on the next generation, and will not be able to pay for such privilege. But then again, getting back to the discussion we already have about the much more complex agenda, which in my world is connected with the industrialization of the EU, about the competing position with the EU, with the Asia, with the US, with the natural resources diversification, with the global marketplace, and so on. So that's it. I don't know if I answered the question, but it's more questions than answers, but such is life.
Yeah, I think that's the order of the day. No, thank you very much. And this is my last question, and then I will pass the mics to the audiences. I'm sure you have some comments, questions as well. So, I mean, you have already, Boris, alluded to this, that the current economic environment is extremely turbulent, to say the least. Definitely the balance of risks are tilted to the downside for most businesses. Weak consumer confidence, supply chain bottlenecks, high prices, and so on and so forth. My question, to finish on a positive note, for Mr. Philippou, for Mr. Mikolaj, and for Dominika are, what are the opportunities, sustainability related opportunities emanating from the current situation? Are there any, and if so, what are they?
As you mentioned, there's the war in Ukraine, energy crisis, and the climate crisis is pushed back regarding these circumstances. I'm not saying that we should build the photovoltaics and ignore what is around us, but we can see there are huge opportunities after the crisis in Ukraine, for example, will end. We can build new infrastructure, new energy infrastructure, together with sustainability policies and strategies. And for me, that's important to think all the time about climate crisis. I'm not saying that it should be top one priority all the time, but not to forget about it.
Well, it's a difficult question, what are the opportunities, but when we look at this disruption that came during the last 2 years, it's COVID and war in Ukraine, what I'm really happy about is that there is much more collaboration and much more solidarity between the business and also all other stakeholders. Of course, it's not easy to cooperate with the state, and also NGOs are much more demanding. But when we look at the sustainability and some long-term goals, without much deeper collaboration of different stakeholders, there is no solution. There is no easy solution. So there is, I look up that I do believe that these two disruptions will extend this collaboration and this empathy and solidarity. Also, when we look at these energy prices, Europe is calling for the solidarity. That should bring the solution for all of us, and that everybody will mutually benefit at the end.
Mr. Mikolaj is smiling, and I'm sure you have thoughts and a slide.
Yes, I do have some thoughts and a slide. So in terms of electricity, I don't want to speak about much about electricity, because this is an ESG opportunity. Okay, you can be a solar, but then you have to find out what you will do when there is no sun shining. You can be wind, but there is no wind blowing. You can be water. What happened now in the summer? You can see the reliance on ESG. So there was no wind blowing. There was no water, so the water electricity was very low. They could not ship coal, so this is the reliance on green energy. But the war in Ukraine is mainly about natural gas. So I do have a slide on gas, because I've seen a couple of you were smiling, a couple of you were throwing, and a couple were tired, but nobody was scared yet. So now is the time. No, I'm just kidding. I want to show you what's going to happen with natural gas, because we're operating a lot of natural gas infrastructure. So this may be for your companies or for your households as well valid. So this is a map of Europe. The more green the country is, the less reliant on natural gas, not Russian gas it is, but natural gas as such. Because as you see in the Western Europe, you have Spain. They have a lot of LNG terminals, so they can bring a lot of natural gas from outside of Russia, and they are far from Russia, so they were not reliant on Russian gas. The more closer you are to Russia, and the more socialistic you were in the past, the more reliant you are on natural gas. Poland is not, because it has sea, it has some LNG terminals, and it has a lot of coal, so they don't give a damn about EU energy policy environmentally, so they have a lot of coal. So where you have some problems is Czech Republic, Slovakia, Austria, Hungary, and then former Yugoslavia. So these are the countries who are very reliant on natural gas from Russia and do not have routes directly connecting them to some other sources. So Europe is last year, Europe consumed on roughly 600 billion cubic meters of natural gas. Now we say, okay, let's make some savings. It was more than 600, so let's make some 10 to 15% savings. So let's say it will be around 550 will be the consumption of Europe if we make the savings. What will happen? Norway will do some production, and then you can see in the upper right corner. So we have some production in the EU. So naturally, Romania has some production, or even we do have some small production. Norway has huge production, so they can supply. Then some production is from Algeria, from Northern Africa. And then you have a lot of LNGs coming in from other parts of the world. And now this is the game that Europe is going to play, that you will have LNG shipment to Spain, but you can't bring it to Slovakia. And that's why this is the point why Hungary and Orban is so harsh in speaking against Germany or France in reliance on natural gas from Russia. It's not only that he is pro-Russian or whatever. He is very reliant, and he's the type of person who isn't afraid to say his opinion on this matter. So so there will be some LNGs coming in, and then we have some deficit. What's still missing, and what can be done? What can be done? So nowadays, LNG terminals are operating at 80% efficiency, because if you operate at 100% efficiency, then perhaps your equipment is being damaged. So if they increase to 100%, so there is some space. If we do some swaps of gas coming in. So nowadays, Algeria is shipping gas to Spain because it's cheaper, but LNG has sufficient terminals, so Algerian gas can be shipped to Italy, and Spain can buy more expensive natural gas from somewhere else in LNG form because they can liquefy. So it's not a problem for them, it's a monetary problem, and this is same valid also for Norway production to UK and then Europe. So this has to be done as well. And then we will be going to the point where we have at least the amount that we need, and no turbine has to break down. If there is some hurricane in LNG transportation, so if you have hurricanes in Asia, so the ships are stranded, so you can't import LNG at the moment. So if everything works out, then we might be off. So there is a possibility that EU will go through the next year quite well, but there are many ifs, and that's why this is the thing that we are still monitoring, and this is the impact of Ukraine on natural gas, not only for our business, because I think there will be some natural gas for households, which are majority of our revenue. So okay, we may lose something, but it's the businesses, it's yours businesses. So this is the impact of Ukraine on your businesses in terms of natural gas and what we'll be doing then.
Thank you very much. I think this is very much on everybody's mind, both on consumers, households, and businesses, and the government, hopefully. But I would like to now get to the kind of interactive part. So if you have any questions, please raise your hand, introduce yourself. Yes, please. There is a mic that's going around, so.
Hello, my name is Rastio, and I'm curious that it was said like nuclear is not sustainable, and I'm curious why. I'm not sure who said that. Yeah.
Can I answer? Currently, it's marked as transition green energy. That means there's the strict regulation and the limits until when we can say that nuclear energy is green. Why it's not so simple to mark it as green? It's the reason that green energy has to comply with another 6 additional sustainability contribution, and as from nuclear energy there's the nuclear waste. It can be dangerous for the environment and it can be dangerous for biodiversity. That's the reason why it's not comply with the rest of the sustainable contribution.
Yes, and is there any outlook when this will change? Because I read studies that...
Currently it's green. That was the specific adjustment. The gas and nuclear energy is marked as green energy sources.
If I can add, we've been involved in the number of feasibility studies for the new nuclear power plant. The problem is not about just about the classification, it's about the sources and financing, because the nuclear are similar in terms like you have a huge initial capex and you have a huge lifetime like 60 years, which is excellent. However, it was on the blacklist on the financing companies and basically we were not able to finance. This is the first point. The second one is that you have a huge track record of being not time and cost overruns. So there are 2 risks, but of course you have the actual status, and it's also my personal opinion. You know what's happening in France and what's happening in Germany, and if one day they decided it's green, it's green. If they decide the other way because of inefficiency in supply of electricity, maybe the situation will change. But in my personal opinion, this is the source which is predictable, which is really should be the backbone of the electricity grid. But it's just my personal opinion.
And I agree that it's more a political decision than physics decision.
Thanks. Any other questions?
My name is Ulrich Kovar. I am from Kronospan. For example, in Slovakia, we built a recycling line for 500,000 cubic meters of recycling timber. Capacity 300,000, 350,000 I would say timber material from the market. I would say project perfect, but suddenly no energy sources, electricity up, people started burning all material. And now prices of timber up, people are cutting material, there is no collectible, and basically there is a paradox. If we don't change behavior of people, they're not burning, let's say, recycling. First, we have a problem with the collection of material from municipalities, and second, how to change behavior not to burn material which we can use later for next 100 years and not to, let's say, put CO2 emissions to the air. And this is basically we are running now on 10% or 20% of our capacity. And we can process 500,000 cubic of recycling material in Slovakia. How to change this behavior in such economical conditions? Because what we see, if you don't have money, basically you don't get, let's say, any impact on the environment, ECG, whatever. If you don't have money, you don't do anything. You can write a nice report, no money, no business.
If I can add, we are a private business, so I probably can comment on anything like this, but I will give another example. We are fighting for the new recycling plan or circular economy for number of years. We are trying to persuade the economy and the Ministry of Environment that really it's better than to put it on the garbage and to recycle it. And now we are in the period that we are waiting for the third year for the feedback from the Ministry of Environment. And basically, when there is a legal, I would say, period of 30 days, we have 1,000 days, and basically you cannot do nothing. You just spend the money, you invest the money, you invest a lot into the people education, trying to tell them, but there is a lot of politics, a lot of municipality politics. Everybody agreed that the recycling makes sense, but nobody as a head of the municipality will vote for this. So it's just about, I don't want to complain, and I agree with what Roman was saying, that we should find the help at the end of your arm. Basically, that's the best arm. You don't have to, I would say, be reliant on state, but sometimes the state has some ammunition which basically you cannot pass by. But also, what is also important to mention is that if you remember the slide which was there, there is also something like which I called heritage from the old socialism time, or which is RVHP time. Like when you call energy efficiency, these countries like Czechoslovakia, Yugoslavia, and so on are not the experts in energy efficiencies, and there is so much to explore and so much to be efficient. So everybody, I think, to the level he has some power, he's eligible, and he has to act somehow. But sometimes you cannot cross the shade. So.
Thank you. Do we have another question? Okay, I think we're running a little bit over time anyway, so I'd like to thank very much to our great panel today for the enticing discussion, also to the organizer for organizing this great event, and to the audiences for being interactive. And I think it is time for some meet and greet over the refreshments. So thank you very much.
I would like to also thank for the great, fantastic discussion. I think we opened many interesting topics. Ladies and gentlemen, this is the end of our conference. Thank you for your participation. We appreciate it. Thank you to all participants and panelists. Now we'll say goodbye to our online guests. And for the ones who are here, please stay. We have some refreshments in front of the door. So thank you very much, and please still enjoy the evening. Thank you. Thank you.
Victoria's name is picking wanted to go to the music.
It's wonderful.
Victoria became ill. First he had to stay in, which was unfortunate. That's all. Quite a quiet weekend.
Gentlemen, as the most enlightened, forward-thinking professional accountants of our generation, I want us to form a professional association that will be open to everyone.
You mean everyone?
Yes, everyone with ability, ambition, determination, and courage. Everyone, regardless of background.
Interesting. So how do we determine who becomes a member?
Examinations of the highest caliber, preparing our members for the demands they will face now and in the future.
Wisdom comes from experience, Arthur. If we want the best members, they'll need some years of that too.
Yes, examinations and experience. Our members will know what is right and fair.
It'll be hard work.
It'll take several years to become a member, but think of the caliber of all those that succeed. They will be outstanding. They will be a force for good.
Oh, yes, well done, guys. Well done.
You know that your everyone will have to include women.
But women aren't allowed to vote, Arthur.
Exactly why our association will be the first to welcome women members.
You'll need the examinations and the experience.
You think women incapable of these things, sir?
I believe you are more than capable, madam.
Women are capable of anything. Women will vote. Women will be pilots and prime ministers. We will lead countries, businesses and organizations around the globe, including this association, where there will be as many women as men. Probably more. Checkmate, Albert.
Goodness.
I take it that you will not be limiting your membership to our shores.
Think what advantages our diverse membership will bring. Wisdom drawn from multiple cultures, experience gained by employment in many varied industries, but all unified by a single recognizable qualification.
Global membership will mean global standards.
The same examinations for all. So how do we deliver them?
The railway network is expanding fast.
Unless you dig a tunnel to France, we'll also need ships.
Once the Wright brothers manage to stay up in the air, we can fly them.
We already send things through wires. Or there's the wireless.
That's how we'll deliver them. By thinking ahead and embracing technology, we can overcome all barriers.
Everything changes. There will be things in the future that we can't imagine.
Like more women in the profession than men?
Even the humble typewriter will evolve.
Our qualification will evolve too. It will always be relevant, so our members stay ahead throughout their careers.
Ladies, gentlemen, my fellow members, some of you might say that numbers make the world go round. I don't know about that, but I believe there is strength in numbers. Our first 100 years saw us grow to 100,000 members. Just 13 years later, in October 2017, we became a global family of 200,000. 200,000 equally qualified professionals, equally equipped, equal in knowledge, equal in wisdom, able to act in the public interest by upholding the very highest ethical and professional standards. To mark this historic milestone, a vast wall containing all 200,000 names has been constructed, and I invite you to celebrate with us by finding your names amongst those of your fellow members. Every single one of you has played your part in this great story, and I am so proud to stand with you now and to have played my part too. I wish you good health and great success on your continued journey.